Agencies are feeling unprecedented pressure to be quicker, faster, and better at everything you do. It's more important than ever that you be nimble, flexible, and able to pivot on a moment's notice. You don't have time to waste entering the same data into multiple systems or hunting and gathering data when you're trying to make critical daily business decisions. And as you grow, the cost of each bad decision grows exponentially. What you're able to get away with in the early days could potentially put you out of business now. We believe there's an answer to these problems, and that is the integrated and automated agency operating model. Let's start by reviewing what these terms actually mean for an agency. Integration means taking the tools that all the different parts of your agency need to manage your client workflow and finances and making them all work together and talk to each other. And automation is simply figuring out your workflow and the actions that need to happen in the daily course of business and letting the machines do as much of the work as possible so your expensive and talented people can spend their time producing amazing work and amazing profits for your agency. Let's take a look at the different agency life stages now. At Advantage, we work with almost 1,000 agencies on a daily basis and have been doing so since 1978. So we've noticed a lot of similarities as agencies grow. To illustrate these concepts, let's follow Susie as she grows her agency, starting out at the startup phase, moving on to become a small agency, graduating to the mid-sized, and finally making it all the way to the end to the large agency. I'm going to walk you through the goals and challenges typical to each life stage, and then we'll take a look at the financial impact of adopting the integrated and automated operating model. Of course, these are generalizations. We completely understand that every agency is different and unique. Culture, location, clients, origin story, etc. all make circumstances and growth different. But again, these are common themes we see across the board. Okay, let's start at the very beginning, the new startup. This agency has 1 to 5 people, typically launches with a single anchor client, and as for tech stack, most agencies at this stage are using a few standalone apps like G Suite or Office, and they're doing manual invoicing and payments, a lot of other processes. Goals are going to be pretty basic. We want to spend as little as possible, make payroll, cover the rent and other expenses, and quite simply survive the first year. Challenges at this stage: most agencies are far too dependent on one client, which can be scary. Everyone wears multiple hats and is grinding around the clock, and this can lead to burnout. And the tech systems we're using don't talk to each other, so there's a lot of manual processes and duplicate entry. What does this all mean at this stage? The upside about being small and only having one client, there's not a lot of complexity, so we can get away with a lot of this. With such a small staff and a small number of projects, everyone is going to know what's being worked on, and we can get things done pretty efficiently just by talking to each other. Because of all this, there's not a lot of reporting or communication complexity, so we don't need to be looking too hard at our overall operating model. Now, that being said, progressive thinkers are already starting to think about what we can do to start gearing up to take on more clients and projects and set ourselves up to grow. Now let's move to the next stage, the small agency. We worked hard, drank a lot of coffee, probably pulled more all-nighters than we should have, but we made it to the next rung in the ladder and we're no longer a startup. We have between 6 and 50 employees and freelancers probably. We've added at least a few more clients. And our tech stack is really starting to grow and get a little messier and more expensive. We've added more standalone apps. We have a whole collection of disconnected systems covering everything from expenses to time tracking, project management, estimating, accounting, communication and collaboration, etc. The goals are going to start to get a little more complicated. We're really focused on financial stability and things like cash flow tracking and accurate billing. With a lot of different employees and clients and projects, it can be easy for things to get missed. We don't want to overbill and lose the trust of our clients, and we certainly don't want to leave any money on the table either. Both are bad. Next thing we really need to think about is scalability. If 6 new projects come in tomorrow, we want to be able to organize and execute them with as little stress as possible. We need to have powerful tools for complex project schedules and timeline management. And of course, we still want to be nimble and respond to those last-minute or high-volume quick tasks. So we need to make sure we have an easy way to handle quick-turn task management while still having them connected to everything else we're working on. And finally, we're really starting to think about profitability now. We have a lot more stakeholders in play, and we need to be able to make the right decisions quickly and accurately every time so we can maximize everybody's returns. Okay, so what are some of the challenges at this point? We have more people to manage and need to know when there's a real need for freelancers. It can be really easy to get bloated there. Our staff are our most important, also most expensive asset, so using them efficiently is critical to the bottom line. We have more clients and projects to manage and deliver on. We have more systems to manage and pay for. And again, as mentioned, these systems typically don't talk to each other well or at all at this point, so we're spending a lot of time hunting and gathering data, duplicating data entry. This can lead to errors. It slows us down, generally wastes a lot of time. We also have different departments now, and often they have their own processes, systems, and tools, and can't see what the others are doing. This ultimately leads to communication breakdowns. So let's bring it all home for this stage. We're feeling more pain from the standalone apps that don't talk to each other. Our communication feels more disconnected. Everyone isn't always aware of what's happening with everybody else. And with projects crossing various groups, we're getting duplication of efforts, which waste time, can lead to errors, and cost us money. The bottom line, things are getting a lot harder. But hey, we're still growing, so let's move on. We've now made it to become a mid-sized agency. Now we've put all the pieces in place to offer full service. We have multiple departments, possibly multiple offices, and with modern technology, that's not quite as important as it used to be, but people are growing. We're now somewhere between 50 and 100 employees and have a diversified client list. Being full service, we've now also added media planning and buying capabilities and a number of the systems that come with that. So what are our goals now? As our agency has grown, so have the goals, as well as their potential impact of our decisions. As with every size agency, financial stability continues to be important, particularly with so many more stakeholders involved. Timely and accurate billing is more important than ever. Now that we're dealing with the media, the numbers can be quite large. Agency profitability is also critical now. Things can fall through the cracks. There's a lot of money changing hands, and it can be easy to make mistakes, miss a bill, or even not bill at all, which of course is a profit killer. We also need accurate and timely reporting and revenue recognition. Projects are getting bigger, and there are more of them to manage, so being able to manage complex project schedules and timelines is even more important. And with so many people at the agency now, we need sophisticated resource management tools and processes in place so that we can manage our teams efficiently. And of course, quick turn task management is always needed so we can take advantage of those last minute opportunities. Let's dig into our challenges a little bit at this stage. As our success grows, so do our challenges. Many of them are the same as when we were small, but the potential risks and returns are an order of magnitude greater. Get it right, and you'll kill it. Get it wrong, and you could cause major pain, potentially even put the agency out of business. Staffing and resource management is even more complex with all the different people. The number, complexity, and cost of all your tech systems is even harder to manage. We have even more clients and projects to keep track of and deliver on. We still have different departments with their own disconnected processes and systems. And finally, a new challenge we start to see at this is the importance of employee onboarding. New staff means time and effort has to be spent to train the new employees on agency processes and procedures. The quicker you can get them up to speed, the more profitable and scalable your agency will be. New people often bring a lot of ideas on how they've done things at other places and tools they've used, and that perspective can be very valuable. But without a well-documented workflow and standard tool set, you can find yourself with an even bigger mess of disconnected programs, processes, and program drift that will result from that. So for this stage, where does that leave us? We're feeling more pain from standalone apps that don't talk to each other. Communication feels more disconnected and confusing. We're wasting a lot of time with manual entry and duplicated efforts. It's becoming increasingly difficult to get the full picture of everything that's happening. And generally speaking, things are a lot harder. Do you see a theme here? Okay, so we've arrived. We're big. We have lots of departments, lots of people, and we can handle anything. Of course, with all of this, we also have lots of different ways things can go off the rails. When and if they do, it can cost us a lot of money and it can hurt. We're now over 100 employees and have more than 25 clients. We have a pretty complex mix of systems, often a large mix of enterprise and standalone apps that can include things like expense reporting, time tracking, project management, estimates and POs, finance and accounting, communication and collaboration, media planning and buying, online digital proofing, etc. There could be a lot of different things happening here. So if we look at our goals, these are pretty much the same as we see at the mid-size stage. They're just bigger in scale. What becomes really important now are things like repeatability, accuracy, and finally, powerful and sophisticated accounting has become a critically important need for an agency of this size. Really need strong discipline here. Our accounting processes and data have to be easily auditable. If we want to take on larger clients, investors, maybe sell our agency someday, merge it with somebody, or even go public, solid auditable accounting is vital. We need to be able to make big decisions and make them fast. And to make these decisions, we need to be able to trust our data, and we need to be able to get to it quickly and easily. If we look at our challenges, as we've mentioned, as we've grown, everything grows with it, so have our challenges. Like our goals, many of the challenges we see at this stage are the same as the mid-sized. What becomes really challenging now is reporting, analysis, and planning. With so many moving pieces and people, it can be really hard to see, control, and trust the data we need to make important daily decisions. These are critical since the numbers in each area are much larger and each one has a potentially large impact. We should try and avoid complex and expensive system integration here. For example, if two merged companies have two separate accounting systems, don't try and integrate the two together. Custom programming or integrations can be an answer, but most agencies don't have this level of technical sophistication, and they can turn into a huge time and money drain when attempted. If you find yourself in this scenario, make the decision on which system is best and migrate everything onto that one. This applies to any of your key systems, whether it be project management, media, accounting, or anywhere. So the conclusion at this stage is, the larger the machine, the more critical integration and automation is. Good, reliable, accurate data is key to successful audits, good decision making, and proper future planning. So now let's talk about the business impact of adopting the integrated and automated agency operating model. What you'll see here is a 3-year ROI period, which we measured for each stage of the agency growth lifecycle. And you'll see we're going to focus right now on the mid-sized agency. So we just kind of went right down the middle of where folks are. And we're going to click in here and take a look at this model and go through this to see how we achieved this ROI calculation. Okay, so let's take a look at this. We'll start at the top. We're going to look at everybody across our agency, right? And remember, as we mentioned, this is going to be a 50-person agency, kind of right down the middle of our agency lifecycle. So we're going to look from the lowest paid person to the highest paid person in our agency. And we're just going to make an assumption here, and we're going to say, on average, we're paying $50,000 a year. Now, of course, the government has to get their cut. We have to pay benefits and everything else. So we're going to put a 30% burden on that. Or we're going to basically mark that up by 30% to cover all that stuff. So what that gives us is our average loaded cost per full-time employee equivalent of $65,000 a year. If we look at a typical 40-hour work week and we take out for vacations and holidays, that gives us roughly 2,000 hours per year. So if we simply do the math on those and divide your total loaded cost by your average work hours per year, That gives you an hourly labor cost for somebody using your system. You're paying out $32.50 an hour for that. We multiply that times our 50 employees. That means every day that everybody in your agency is working in your systems is costing you $1,625. And if we say out of that 40-hour work week, we're going to say we've got people are spending about a quarter of their time working in the system, which means obviously 40 hours per month. For an agency of this size, this is what we typically will see. You'll see a project management system, time management paying separately for, an expense management system, some sort of accounting and financial management system. Now you notice I left the media planning and media buying systems blank. And the reason I did this is I want this to be relevant to everybody. Those of you that are paying for those systems, you know those can get very expensive very quickly. But we're going to run this calculation without those so that it can be a good rule of thumb for everybody who's doing this, even if they aren't offering those services. These costs that we see, again, we work with almost 1,000 agencies on a daily basis, so we have a pretty good idea of what different systems cost. Okay, what does this mean? What is this going to do for us? We're going to assume that we can get about a 5% efficiency gain, which if you look at people spending 10 hours a week, that means we think by implementing an integrated and automated operating model, we're going to save each person maybe an hour a week. And that's actually very conservative, but I always like to do these things conservatively. If you look at everybody saving 5% by having more efficient connected systems, not doing all that manual entry and hunting and gathering data, that works out to a financial value for you, for your agency, of $3,250. Okay, so let's take a look at the business case. How does this plug into a business case? So starting over here in year one, right? We're going to replace all those different disconnected systems. We'll be able to replace with one that's all connected together. So obviously those costs are going to go away. But you, of course, need to make an investment in a new system. Because you're not paying a bunch of different companies, there's going to be some built-in savings there. So here in year one, you're seeing a hard dollar savings of almost $6,000 after accounting for some setup costs. And then year two forward, almost $11,000 hard cash money back in your pocket every year. When we look at the labor cost efficiency gains, that was that, saving everybody an hour a week and bringing that hourly labor cost down for time wasted in the systems. Now we're looking at a $39,000 a year return on that. So if we add your hard dollars and your efficiency gains together, this has real financial value to your business of almost $45,000 in year one and almost $50,000 a year in perpetuity after that. Measured over a 3-year period, that investment that you made has given you back almost $150,000 with a 152% return, which obviously is going to continue to go up the further out you measure. So I think as you can see, there's very clearly a strong financial rationale for adopting the integrated and automated agency operating model. So what are the bottom lines for everything we've talked about here today? Let's bring it all home. Having to work in multiple systems costs you time, money, and puts you at risk. There is a better way to work. By being thoughtful and letting the computers do the work for you, you can produce better quality work, service more clients, have more fun, and ultimately make more money. Thanks so much for listening. Please feel free to reach out to us if there's anything we can do to help you.